Alright, we're live, guys. Welcome to a new market update. This is your host Faro of Awareify, coming to you live from Barcelona, Spain. And I'm gonna keep it short and straight to the point. We're gonna go to the charts of the total market cap. So we have a big screen here where I hope that everything will be visible. And right now we are at the point in the market where it is looking strong overall, but there are some signs in the short term that we could retrace a little bit or go sideways. So it's a critical moment where you can mitigate your risk by taking some off the table, especially from alts. And let's dive in the chart where it is clearly visible. We're looking at the total market cap, and we are approaching this resistance line that you can see on the red. And according to an indicator that has proven to be quite efficient in the past, the nines, we are going to be on a 9 tomorrow, meaning that there is a risk that we could retrace. We are right now on around 2.3 trillion market cap, but we could come back to 2 where we could find support, or maybe we could also go back just below 2 where you will have a next buying opportunity. So that is something that you can position yourself for. We have a few targets that is still in play in the long term though. So it is not a moment to panic or do anything rash, since after we broke out of this falling wedge where you see the purple line, by the way, we reversed on this 9 here, leading to another 9 on the other side. So these indicator works kind of both ways, giving you a buy and a sell signal on the daily time frame. So we have this target of the falling wedge that we broke out, which is around just above 2.4, and this coincides with the target when we zoom in where you see the green. It is an inverse head and shoulders pattern which has a target that coincides with the falling wedge target, both at 2.4, meaning that it's quite a significant level, and also from a psychological point of view it's just below 2.5. And I do think that we'll get there and that it could form some resistance. But overall, the bigger target is still outstanding of 2.8. And that is something that is measured from here. So a 30% increase after we broke 1.75 trillion. That is on the total market cap for all cryptocurrencies. Meaning that whether you're in Bitcoin, whether you're in Ethereum, whether you're in altcoins, if you have made some profits, take something off, don't be too greedy, put it in Bitcoin, and especially if you're leverage trading, this would be a good time to close out. Let's see, what else do we have here? Right, so this is a bigger time frame that I want to show you guys. It's on a weekly, and we're also looking at the total market cap of the cryptos. Let me just take this indicator off. And as you can see, this is the moment when Bitcoin basically broke 10k, which was around summer of 2020. After this happened, this was the moment that you should have gotten in. And the target, we have 2 targets, okay? So we have the first target, which is basically the opening from this symmetrical triangle, kind of a wedge, which is outstanding at 3.2 trillion. So again, we are, let's say we have 2.8, then we have 3.2, meaning that we could go to either 2.8, 3.2, and then just hover around, and that is a key level, and we are approaching it slowly but steadily. Once we get there, I do expect, if it was my guess, I would say there's a large chance that we can top there for the midterm, maybe come back to 2 from 3. It would be decent enough retracement. but then we have an outstanding target, which is basically if you would look at this as a flag, then the measured target is the pole of the flag, which is from basically from the early days of crypto in 2014, when we were at 10.5 billion market cap. Then we broke that in 2016, which led to the first big, let's say, mainstream adoption in 2017, the big mania, and that's a target of around 8,000%, which should take us to 23 trillion. Now, I'm not saying that this will happen this year. This can take a few years to get there, but it is a target, a technical target that is valid. But first things first, 3.2, 3 and 2.8. But just a chart that you can draw for yourself, look at it, to have the long-term vision of where this thing's going. If you're ever panicking about long-term investments and such, just look at this. Alright, next let's go to the Bitcoin dominance chart that actually officially reached our first target. So again, I showed you a bull flag where the measured target was the pole. We have a similar pattern here of this head and shoulders on the Bitcoin dominance that you should remember, because I mentioned it a few times, that we broke down of. Basically went from 74 down to 60. We broke that, and the target is 49. Now we have a conflux of 4 key levels at this moment, and we are reaching them as we speak. So first of all, we have this support here on this purple line that you can see, which we pierced through, just like we pierced through it back in December when Bitcoin started to take off from 20k, and it led altcoins kind of being, they stayed behind, and you should have been all in Bitcoin, otherwise your portfolio would have been losing value in Satoshis. Right now, we are at exactly in a similar fashion on the opposite side of this cycle, where the risk is much bigger than the reward, because I can see this thing going back to 55, maybe even to 60. And in this case, if that happens, so either Bitcoin will have to take off, again leaving all altcoins behind, or what I rather think is that the entire market will retrace a little, and people will take profits from altcoins, put it in Bitcoin, and it will decrease less than the rest. That's usually how it goes. There is another scenario, a bullish scenario, which could happen, which is that we will go straight down to 35, because the market will be so bullish. No one would basically be selling their altcoins, no one will be in Bitcoin, and maybe if institutions start to adopt, let's say the bigger DeFis and other projects such as these. But so we have the first target here, 49%. Then we have the 1.618 fit, which is drawn from the 74 level to the 57. So from top to bottom, it's a period of, let's say, August 2019. It's almost a year. So it's a pretty good number, because look, 50 is also a key psychological level. Then it has proven to be support here back in July 2017. Look, it touched it once, twice, third time, fourth time as support, then as resistance, 1 time, 2 time, then it pierced through, then again it's support, 1, 2, and now we're back here. So that is basically the three scenarios that can take place. Just be prepared for them and act accordingly. So what do we have here? Okay, There's also another chart that might be a bit cleaner, and this is also a chart that I've shown you in the past. It's the same chart. The difference is that the previous one takes all the cryptocurrencies into the data. So it also has number 2000, 3000, whatever, altcoin, shitcoin. But this one only takes the top 100 in the number. So it's a bit more reliable, it's a bit more clean. And if we zoom in, look at where we are. So you see the red lines, that's resistance, that's a second resistance trend line. Then again, the 618 FIP, because the other one was drawn in reverse, right? So this is 618, the other one 1618, 50%. I think that it's the rational thing to take risk off and to leave some altcoins maybe to run, because right now we have seen, let me also show you this just so that I can illustrate this point really quickly. Let's just briefly go through the top 20. Okay, you see that Bitcoin has almost made 20% in the last 7 days, but most of the top altcoins have been outperforming Bitcoin. So ETH did a almost 20% outperformance on Bitcoin. Same with Binance, XRP, even not gonna into it. Dogecoin, ADA, pretty level, DOT, Swap, Chainlink, VeChain, some newer projects, even some that did well in the previous cycle, like Neo, Monero, so Ethereum Classic, some of the OG projects out there that have existed since 2015, 2016. So if you look at this, and let's just go at the highest gainer of this week, the money right now is kind of in the mid-tier of the altcoins, which makes me believe that there could still be space for the smaller cap tokens to do something crazy, like in the next few days, maybe still next week. But just know that once Bitcoin starts to retrace, if it retraces, that it can still take the majority of these altcoins down with it. And even if you have a good technical setup, Bitcoin can still drag it down. So just be aware of this. Then, so Ethereum is quite strong, I have to say. I mean, let's go to the daily time frame on the right side. Let me just make this bigger and clean this up. So look, we've had this, how's it called? Ascending wedge, which it has done in the past, and it actually popped the top out. And it has a tendency to do this, where people think, look, it is hitting resistance, so people are going either short or taking selling their Ethereum for Bitcoin, as I've been doing over the last few days and weeks. But because the majority of people are selling or are being short, it can still kind of squeeze up. And right now, although it is looking strong, it can also be capitulation to the top. So if we have a big reversal in the next, let's say 2 to 3 days, then this could be the top for Ethereum. But, and look, we also reached the target that was outstanding of 27.85, I believe it was. So around 40% after we broke basically 2K. Target is reached. So right now we are in something that's called overperformance. But if you have any outstanding leverage trades, you should already be out and only have like maybe 10% of your trade still running for the moon, basically. But let me pull this other chart where I have the other targets, and let's see, hope it's not too cluttered. Right, so this white trend line, maybe if you can just zoom in a little here, and this is currently acting as support, and as you can see the price is almost going parabolic since we basically left, let's say we broke out here from 2300. It has just been rising, and people are buying, and so this target which we had from back from end of March when we broke 1850, look, this triangle target was 2875. We reached it, we breached it, and now we are on our way to 3500. But where what else did we breach? The 3000 level. Again, a big psychological number where people will take profits, so don't be surprised if we go up to 3500 and then maybe come back down to 3 and then maybe even below. So if we zoom out a little, look, we are in this bigger widening. This is called a megaphone, where you have the opening of this channel, where it is, the volatility basically contracted, it's small, and then it widens. So the volatility is increasing as we move forward in price, and that's an alert going off for Ethereum that is now going above 3200. And I'm assuming that this is, retail mostly panic buying right now. So I still have a small percentage in ETH, which I will take off if and when we will reach 3500, maybe even 4K. And then just gonna wait patiently, because there is a big probability that this yellow resistance line will act as resistant, as it has done in January one time, 2 times, 3 times, 4 times, 5, 6, 7, so it is significant. Final 2 things, ETH BTC, so that we can see this overperformance as well. And this is a white chart, so please do bear with me. This should remind you a little bit of the Bitcoin dominance chart that I showed you earlier, because it has a lot of the print of Ethereum in it. And look at where we are again. This red trend line that acted as resistance once, twice, 3 times, 4 times, now 5th time. Now, would you go leverage long here, or would you rather take profits out? And would you have bought when it was at 3 and now it has almost doubled? That means if you would have put 1 Bitcoin end of March, 1 month later you would have flipped it to 2. And this is the most conservative trade that you should have done, at least if you have been following our community. Now, it can still go up to the 0.06 level, and if it gets there, let's just take the current price of Bitcoin. Okay, let's round it up to 58. So that will be 58, 0.06, 3500. Now, it is realistic. It can go there tomorrow, but once it goes there, I do expect a little pause. Then finally, look at the macro picture. So we have on the left side the dollar index. Not too much going on right now. It is kind of on support. Let me just take this off. So look, we were at 93, 94, also end of March, and right now we are trying to break out. And if we do, it might go back to 93, meaning that purchasing power might increase, being in fiat, so in dollar, euros, whatever. And if that is the case, then people will add to their USD in their portfolio. So just bear in mind that if this coincides with the Bitcoin dominance, with Ethereum and also Bitcoin reaching key levels, then you have, you know, a few ducks lining up. Then the S&P, and we will see that the S&P has also reached a key level that we have been waiting for since it broke out the 4,000. So look, it was 12th February this year when it reached there. It acted as resistance, and then it broke out from here, and it had a target of this is almost 6% to 4,200, where it is right now. And since it has reached this level, it has been kind of moving sideways. So in conclusion, look guys, this is a no-brainer. On a macro scale, the S&P reached the critical target, the dollar index is on support, Bitcoin is looking, actually let's go back to Bitcoin just for a brief moment, because there is one target outstanding that I didn't mention. And so Bitcoin also broke out of the falling wedge, just like Ethereum. But as you can see, it has not been moving as fast. But the target is 69k. A nice number as always, but it is still outstanding, and I'm not making these numbers up, okay? It's just how you calculate from the breakout point. The inverse head and shoulders target is 66.6, also a nice number, but so it has broken out of this inverse head and shoulders, and these two targets are also kind of in line, which begs the question, maybe just for this reason, Bitcoin can still rise in value while the altcoins already start to decrease. So it's a bit of a complex situation. I think that maybe we need something fundamental to happen, such as some big Fortune 100 companies, maybe new larger hedge funds, announcing that they're putting their a part of their treasuries in Bitcoin. Then something like this, or maybe some legislative action from the US could change something, or it can also be something related to I don't think a country banning Bitcoin is going to do much. People are kind of started to become immune to this, but what still can happen is that for example, a large enforcement body like the SEC could announce that they will either impose new tax laws on DeFis, or they will announce that some of these cryptocurrencies are securities, and we know that currently only Bitcoin and Ethereum have been listed as official non-securities. So we saw what happened with the Ripple case when they started, when they basically got sued by the SEC. Now it is kind of recovering, but do not be surprised if something like that happens with any of the other larger projects, right? So something to bear in mind, but we're sticking with the data, we're sticking with TA as our main guide, as it has been serving well. One other thing, okay, that I will show here, it's the volume by price. And look, as I was saying in the Telegram group, if you are in there, once we broke 57k, you could have entered on a low risk and used, you can still use this as a stop loss, and you can still enter, but just know that we are on some key resistance level on a macro scale. But this is something that I drew some time ago. The risk to reward of entering right now is still around 3.5 to 1, meaning that your downside risk is 5%. If it goes below that, you just go out, but you can still make 17% in Bitcoin. So do with it as you wish. Alright guys, a quick, actually not sure if I can log in on the website there. A final shilling for Awareify. If you want to learn about this stuff, you know what to do. You go to awareify.com, and if you haven't already signed up for a newsletter, you do that there, and you contact me or someone from the team, and you get in touch, and you can find out what we can do for you. Now, for the final closing of this market update, we have this beautiful Wall Street bull, a gift from New York, from a dear friend, from who this place is in this nice screen. So I want to give a quick shout out, and may the bull serve us well in the coming weeks and months. So let's not forget it's May, and there's a famous saying that tends to repeat itself because most people already know this. It is sell in May and go away. And actually the technicals are kind of aligning that this might happen in a few weeks. So stay tuned, and as always, be safe, and we'll see you in the next market update.